the contribution of non-bank capital into the space, A, has increased and B, is there to stay. Those various sources of capital cohabit in a marketplace that is expanding. There's a lot of opportunities for banks and non-banks to thrive together.
Omar, thank you very much for being here today. We are in London with hundreds of CEOs, directors, from the debt and the credit real estate environment. I'd like to start by asking you to introduce yourself and to explain more about your role at Citi Group, please.
Sure. Thanks for having me. I'm Omar El Glaoui. I co-run the real estate finance business for Citi in Europe. We're part of a global platform, which is a very active market participant in CRE across a number of strategies and asset classes.
Omar, how are private lenders positioning themselves in the capital stack, and what risk returns profiles are they targeting?
Sure. So I think what we're serving is a marketplace that is diversifying. I think the notion of non-bank lenders providing capital against CRE is an old notion, actually, but it's also a very topical one, given the amount of capital that has flown into the space. So what we're seeing increasingly is a wider range of positioning of those non-bank players across the cap stack and across the risk reward spectrum, all the way from senior lending through mezzanine, levered whole loan, all the way to Pref equity. So I think what we're seeing is a wider range of sources of capital for a wider range of opportunities.
And how is the tightening of traditional bank credit creating space for private credit funds, insurance, capital, and other non-bank players to participate in the real estate financing?
Yeah, that's a good question. So I think, fundamentally, we don't feel that bank capital is retreating per se with respect to CRE. I think even within the bank space, I think there's a lot of diversity in terms of approach to the asset class. So I think as speaking for ourselves, we've continued to broaden and expand our market positioning in CRE rather than narrow it. And I think that's true for many bank participants. At the same time, you're right in saying that as a secular trend, I think the contribution of non-bank capital into the space, A, has increased and B, is there to stay. So I think the answer to your question is that those various sources of capital, I think, cohabit in a marketplace that is expanding. So I see this as an opportunity to provide more liquidity into the space as opposed to necessarily a cannibalisation effect.
Are we moving toward competition or complementary? How can banks and private credit platforms collaborate through co-lending models?
I think there's fundamentally, I think a lot of complementarity in approach. Whether that complementarity comes from different positioning in terms of appetite and risk reward accordingly, which translate into banks and non-banks maybe being at different levels of the cap stack. It can be complementarity in terms of banks being able to source opportunities for non-bank lenders, banks being able to act in the traditional fashion of capital markets, arranger, structure, and distributors. So I think there's a lot of opportunities for banks and non-banks to thrive together, work together, and certainly that's been our experience, is that we've done all of the above in terms of our relationships with non-banks, and I think we just expect more of that. So I'd say collaboration, complementarity, again, rather than cannibalization.
Now, what kind of conversations is going on right now outside this room in the coffee breaks amongst the leaders here? What kind of topics, what's keeping everyone awake, or what they're talking about?
I think it's always great to attend those gatherings. It's because of those conversations. I think obviously the panels are great. I think the informal conversations just really allow, I think, participants to really get a pulse of the marketplace, and therefore, like the themes that people then take away and think about. And I think for us as a marketplace, I think, some of the key themes are the hope and desire, which I think is grounded in reason, that the underlying investment volumes in real estate in Europe will expand. And therefore that will translate into an increased amount of need for liquidity that we're all providing here. And to my earlier point, I think that's just going to continue to magnify this effect of, people finding sweet spots across a wider universe of opportunity. So I think that's definitely something that I have definitely picked up in my conversations here. And then, by and large, I think those themes around collaboration, around partnerships, around how non-bank and bank capital function together, I think it definitely resonates in the room.